Ladies and gentlemen, good day and welcome to the Q3FY22 earnings conference call of Infibeam Avenues Limited hosted by KR Choksey Research. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Parvati. Thank you and over to you, ma'am.
Thank you. Good evening, everyone. On behalf of KR Choksey Research, we welcome you all for the Q3 FY2022 earnings conference call of Infibeam Avenues Limited. I take this opportunity to welcome the management of Infibeam Avenues, represented by Mr. Vishal Mehta, Managing Director, Mr. Vishwas Patel, Executive Director, Founder and CEO of Payments Business, Mr. R. Shrikant, President, and Mr. Hiren Padhya, Financial Officer. We begin this call with a brief overview of the company by the management, followed by the Q&A. I now hand over the call to Mr. Vishal Mehta for his opening remarks. Thank you, and over to you, sir.
Thank you, Bhavani. Good evening and welcome everyone to our third quarter earnings call. I want to wish everyone a very happy, safe and prosperous 2022. India presents a very, very great opportunity as we are a very nascent, in a very nascent startup ecosystem with about only 4 to 5 years in this space versus 20-25 years by most other countries like the US, UK, China, Japan, Korea and others. Hence, we believe this decade will be the year of tech-led organizations for India that will solve many business challenges and make us more efficient in the way we do business, consume resources, and will make governments also very efficient to handle economic affairs with use of technology. Government's vision is to make India a less cash economy, and Infibeam will play its part in adding to the nation's purpose. We aim to do that by enabling the merchants from top of the pyramid right up to the bottom with 2 of the most basic business requirements in the digital space: marketplace software and platforms to do digitally and payments to accept money digitally. And we offer a full stack solutions under both these options, and we've been doing it for more than 2 decades now. Many global tech platform companies have over the last 2-3 years also doubled up as a payments company. We envisioned this combination as a successful business strategy back in 2016. Together, we have built a very comprehensive suite and solution for our merchants for a very long-term value creation and sustainable growth. We have presented this on slide number 16 of our presentation deck, which is called Growth-Oriented Business Model as a header, under the company overview section in the earnings presentation. In the slide, you will also see, as we began our journey with digital payments, we built a deep portfolio and a profitable business model for long-term sustainability. Our payments business under the brand CC Avenue, which was launched in 2001, and we will complete more than 2 decades of incorporation in the next few days. We have been PAT profitable, profit after tax profitable in this business for 20 years straight. A reputed Singapore-based research firm in the FinTech blog mentioned, Can payments be profitable? ? They say lessons from Infibeam Avenues. Our payments business has a very strong customer acquisition engine with almost minimal customer acquisition cost. We worked in retail payments for more than 11 years and had the benefit of first mover advantage to target all the premium businesses in India whom we can continue to serve even today. We have built an innovative products through our journey and expanded both horizontally into different payment acquiring businesses, and we've expanded internationally as well. We cover merchants of all different sizes and scale. To have a huge competitive advantage and a great value proposition on top of our payments business, we have the platform business to significantly scale up the customer acquisition and also a retention, engagement, and cross-sell opportunity. The combination of payments and platforms, enterprise platforms that make the customer even more sticky and allows us to generate additional revenue, scale our businesses, and start incrementally contributing to our margins. Among the platforms, the GEM platform, which is called the Government e-Marketplace, is one of the strongest offerings with millions of merchants registered to sell to the government. We earn on a per transaction basis with revenue linked to order value of each transaction. In FY22, the order value is estimated to be 1 lakh crore, which is projected to double by FY23 as per comments from GEM. Thus, the scaling opportunity is immense, and unlike payments, there is no pass-through as this is a business of software. So most of the earnings flow to EBITDA and PAT. This is why our platform business is high operating margins, and it helps us to generate consistent cash flows quarter over quarter. Also, the merchant base on such platforms have been increasing at a very fast pace. Currently, GEM alone has 3.5 million merchants. Add to this one the merchants of our payments business, acquiring business, the entire offering of CC Avenue, and from other platform businesses, that is Bill Avenue, as well as Res Avenue, as well as other large enterprise clients to whom we cater the platform business to, presents a very long-term opportunity to build out our new products. To let you know, we added almost 8,000 merchants across our fintech portfolio every single day in Q3, totaling to over 800,000 merchants in the 3 months ending December 2021, which has been our highest ever. We've added 5 million merchants with many marquee brands. Similar to our own payments and platform growth strategy, we also have an investment-led growth strategy. See the bottom of slide 16. We aim to present across the entire ecosystems of payments comprising of payment acquiring through Infibeam Avenues, payment issuance through our majority-owned subsidiaries, which is Go Payments, a payment network through our majority-held subsidiary Soham Bharat in consortium with other large MNCs and international MNCs as well, where we are awaiting RBI approval, as well as cross-border payments through Fable Fintech, incubated right in our offices. The entire portfolio of ours leads to our next phase of growth to monetize on the rich and growing merchant database. We aim to do so by enabling lending to our merchants. We know the credit gap in the country is almost $300 billion, and takers are many. We have 3 models under lending, which we discussed in the last call as well. Secured lending through same-day settlements, which we are doing. Aggregating buy now, pay later option. And third, enabling credit through a credit platform, Trust Avenue, which we launched today. Secured lending is up from $150 million in Q2 to $175 million in Q3, a run rate of $700 million, 3x ahead of our FY22 guidance of $200 million. We are targeting $1 billion run rate by end of March 2022. The buy now, pay later option, which is the second option, are available, and under our payment gateway, we will offer more and more of these options to merchants, where we can earn upfront MDR, which is merchant discount rate, without any collection worry or NPAs. And the credit platform Trust Avenue will be a future revenue and margin driver for us, one that we will give to all our platform implementations as well as to our clients using our payment gateway. India's digital story picked up from the time of demonetization, accelerated by COVID, and also digital has been one of the core go-to-market strategies for most businesses. Overall, digital payments in India is just about 4 or 5 years old versus nearly 2 decades in some of the countries, including US and China. There are only about 250 million digital payment users in India, with a population of 1.4 billion. Hence, we believe the headroom for growth in India is significant, and we are at an advantageous place due to our unique business model. Between December 2020 to December 2021, our market share in India's digital payments industry, as per RBI report, has significantly improved. It is important here to note that while we are chasing growth, we are also having a profitable business model, and we continue to grow our profits in India's hyper-competitive market with predatory pricing, and where there are regulatory guidelines of zero MDR on UPI and RuPay debit cards. Hence, we continue to maintain single-digit contribution from zero MDR payment options. Hence, the impact on our net take rate is low. We continue gaining market share without compromising on profits. Our next few years, we will invest and work towards improving our market share further in India, increase revenue contribution from our new businesses, and our investment-led business scale, as well as our international expansion scales, It will also scale with our lending business. It will improve further our operating profits. We are also planning, and we will be announcing, and we've already talked about this in our disclosures, and Vishwas will cover it in slightly more detail. But all our payments today are digitally online payments. And we are now also getting into an offline payment opportunity, one that will be hybrid, one that takes over a merchant's payment requirements, both as online as well as offline. Thank you, and I will now ask Vishwas to give you updates on the payment business and more.
Thanks, Vishal. So this quarter, we have taken payments to a new high. So our payments transaction processing value has grown 60% year on year. We have added a thick pipeline of merchants which is consistently growing for the last 5-6 quarters. So we are very proud that we have double the number of merchants than one of our largest peers. Our 21-year-old brand speaks for us when it comes to portfolio services, security, success rate, tech support, customer service, and even on timely payouts to the merchants. We are a preferred choice of our customers and partners. This quarter, we have seen a good uptake in the sectors that were badly affected by the COVID pandemic, be it airlines, travel, and all those have experienced pre-COVID levels of volume. This is a very good sign, and we hope the trend to continue, which will have a positive bearing on our overall performances. We continue to expand our portfolio in the Indian market. In the past, we have launched payments for corporates, payment services for banks, expanded possibilities within our online payment gateway business. But today, we are taking a very big step further to become a full-fledged payments player by entering into the offline payments. For this, we have acquired 100% in the Bangalore-based Uvik Technologies, whose payment platforms can allow smartphones to be converted into business and payment terminals. Apart from contactless technology allowing to pay by tapping on the phone, we can also offer QR codes for payments, payment links. We can offer bill payment services embedded within the app. We can also offer them agency services through Go Payments, which can be an additional income to them. We can enable lending, we can offer credit cards, we can offer BNPL options for our customers, reports, analytics, and many other things, which really helps in the merchant's day-to-day business. We'll also be able to give seamless payment technology with a larger basket of services for those merchants having both offline and online presence. The company has issued equity shares of preferential basis to Season 2 Ventures, not exceeding 27.5 crores as part of the deal. Additionally, we also keep building the tech stack. We realize the opportunity is ripe for lending to the merchants to help them with working capital and grow the businesses. Vishal already mentioned the above 3 models that we have under lending. Today, we have announced the launch of trustavenue.com, a marketplace lending platform for businesses to get unsecured loans, MSME loans up to rupees 5 crores and loans under the government's Mudra scheme. An in-principle approval for a loan comes in less than an hour. We have 5 million merchants and we are rolling this out for everyone. We have multiple layers of revenue. We do not take any credit exposure as we are a tech platform offering a marketplace with high intelligence and analytics for our merchants for the lending institutions to carefully underwrite the loans. Continuing our expansion in the Middle East, especially GCC, we have received an expression of interest from the royal family of Qatar, Thani Group, to form a JV in Qatar. They will also be doing a primary investment in the JV by the royal family. Infibeam Avenues, directly or through its subsidiary, holds majority stake in the JV. This year, Qatar is hosting the football FIFA World Cup in November 2022. As the nation gear up for this event, we believe there will be a lot of opportunities through the year to expand quickly in Qatar. Qatar, like its peers in GCC, is focusing on increasing the digital business. With Qatar's entry, we'll cover 3/4 of the GCC in the payments business, namely Oman, UAE, Saudi, and now Qatar, the 4 biggest players, e-commerce markets in the GCC region. We await RBI's approval on the new umbrella entity, for the payments network license like an NPCI. A payment network is the most important digital part of the digital payment ecosystem. If we get the license, it will be a big opportunity where we can build innovative products through our experience, and with the help of our consortium partners, we'll be able to reach the bottom of the pyramid and to serve customers across India. Now, let me hand over the call to Srikant to give you a Q3 business update. Thank you, and Srikant, over to you.
Thanks, Vishal, and thanks, Vishwas. During the quarter, we saw 90% increase in our total TPV, led by sharp growth in payments business and increase in order value on a government marketplace. We are now at the run rate of processing over 3 lakh crore, more than double of what we did in the whole of FY21. We are inching closer towards achieving a total TPV of 1,000 crores on an average per day, which we plan to achieve by the end of March 22, and then double it as we exit actually in FY23. The growth in payment business in terms of total TPV comes mainly from the large enterprises that we have added in the last few quarters, festival buying during the quarter, increasing contributions from travel and hospitality sectors due to Diwali and Christmas vacations and other festival vacations, and an average increase in discretionary spends led by festival quarter. This quarter, we have added a lot of SMEs, grocers too, and it will be interesting to see how this industry plays out over the short to medium term. Growth in gem order value comes from continuous effort of the government to make the digital purchases for transparency and savings, encouraging government departments to buy from the platform, and large number of sellers from various sectors registering on the platform, increasing the number of products and services available on the platform. In the last 30 days, starting from the last week of November to last week of December, the order value on government e-marketplace platform was in the range of 10,000 crores on an average, 353 crore actually per day, which is very remarkable number. We are strengthening our payments play by entering into offline, as Vishal and Vishwas just mentioned a few minutes ago. So we will be targeting offline as well, as it opens plenty of opportunity for us. CC Avenue, our business brand for payments, app-based zero-cost point of sale, and the basket services the company offers, all under one roof, will help the company in acquiring offline customers to scale our payment business. We have received, as Vishwas was mentioning, expression of interest from royal family of Qatar, including primary investments from them to set up payment business in Qatar through a joint venture structure. Qatar's entry will further deepen our penetrations in the fast-growing GCC e-commerce market, which is expected to double $50 billion by 2025 from $24 billion as in 2020, as per current report. We already have a presence, as you all know, in UAE, Saudi, and we are market leader in our credit card payment business in Oman. Our AI-based platform, branded Trust Avenue, is actually launched today. Partnership with lenders and their integration is now in full swing. Our comprehensive payments and platform stacks are an engaging tool for the merchants, which we plan to monetize through the lending and exciting services that we will build upon as we go forward. Lending will be the revenue and margin growth driver in the next 2 to 3 years' time as we scale. I will now hand over the call to our CFO, Hiran Padhya. Over to you, Hiran.
Thank you, Srikant. Our revenue for the third quarter was up by 74% year over year. If you notice, Q3 of last year was already the top quarter in FY21, and we rose by 74% on that. This is mainly due to our continuous effort of building a strong fintech portfolio with high merchant additions over the last 5 to 6 quarters, which is helping us building a strong growth pipeline. This quarter, we offered promotional rates in the payment business, processing fee of 1.75% due to festivals and vacation or travel season during this quarter. The processing fee was 2% in quarter 2. Despite the drop in the processing fee, we were able to grow our net take rate by 2% in the quarter, which has led by good business portfolio mix. So far as EBITDA is concerned, in this quarter, it has grown by 10% quarter on quarter. This quarter, we have made expenses towards building a new business, leading to higher total operating expenses. These expenses are necessary in order to build future growth. We are in an expansion mode. Given the 75% plus headroom available for growth in India in payments, we are chasing growth but without compromising on profits. Our profit after tax have increased to 74 crore in the quarter, growing by 89% year over year and 35% quarter on quarter. Our cash position remains strong. EBITDA to cash conversion has consistently been above 100% for many years now. Our capex cycle is behind us and we are a debt-free company. As we scale in our new businesses over the next few years, in India and internationally, our cash flow will improve further and the economy will generate higher ROA and ROE. With this, I hand over the floor to the operator for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anil Nahata, an investor. Please go ahead.
Hi. I have a couple of questions. The first question is on the UVIC deal. I would just like to know that how are we going to scale up this business and at what level presently the business is, if you can give me like the 6 monthly numbers or 9 monthly numbers, and how do our merchants are onboarded onto that platform? Is it a direct onboarding or there is some other way to do it?
Okay, Swas here. I'll just take the question. Okay, the idea here is that, look, today we are very well represented on the online space, on the website, for in-app connections and other things. Now, if you see, the problem in India is on the offline acquiring, in the sense that you won't find a POS terminal at a Kirana store, say in a village in Assam or Odisha, right? Because the point of sale terminal is around 10 to 12,000 rupees, and the cost of deploying and training the merchant, plus there are hardware costs of battery and other things that keep recurring, and of course you have to keep sending them printer rolls for charging those, printing those charge slip at the end of the transaction. So that's why the POS terminal was not able to penetrate into that level 2, tier 2, tier 3, tier 4, and limited numbers. So what is now coming is QR codes in the small places, which is very limited with only UPI transactions. It can't do credit card transactions and other things. UVIC has a tap on phone, which comes within an app. So within a CC Avenue Mars app, right, here you can do a digital onboarding of a merchant, right, within 2 minutes, and then the merchant has the ability to accept credit card, debit card, everything within the system. So what it means, like suppose if you are a tuition teacher somewhere in a village in Tamil Nadu and you want to accept 1,100 rupees from a person, from your student's parents, right, and they are giving you a credit card but you can't, right, accept. So all you have to do is go to the Google Play Store and download the CC Avenue app, right, and there like a calculator kind of interface comes in. You just put 1,100, and then from your phone only the parents can just tap on the phone to their credit card, debit card, and the transaction will go through without a OTP or anything. So that's how easy it is then deploying a POS. And we anticipate the point of sale terminals to disappear in the next 3 years. So this is the future technology. Tap on phone. Any phone can become a acquiring point of sale terminal. Now today we are growing exponentially. If you see the merchant intake, we onboarded 800,000 merchants this quarter at the rate of 8,000 merchants every day. Now with this kind of solutions, which is mass based and anybody across the country can start just download and start accepting payments for offline customers or customers present scenario, then we intend to scale up. So hence our total processing volume at 44 billion, we have already given guidance of $100 billion in the next 3 years. So this will help expedite our growth rate. And this is future technology. UVIC is the only company in India which has certified with MasterCard, Visa and NPCI's RuPay to accept the transactions with glass, pin on glass. Right? So they are the only company in fact, Asia Pacific which is certified right now along with one company in Turkey. Hence the acquisition made all sense. It also helps all our existing bases of almost 5 million merchants. So those who are using POS terminal offline can start downloading the app and collect it through their smartphones.
Yeah, that sounds great. I mean, what kind of top line are we expecting from, what kind of like transaction processing volumes we are expecting from this in a couple of years' time? Out of the 100 billion.
We already given guidance of 100 billion, more than double from what we are at $44 billion run rate. It will go more than double than what we are and even more further. So it depends on how far we are able to aggressively market and which we are going to do market aggressively. But it will double from the current TPV that we have, and even the merchant intake we expect to double from the current 5 million.
Okay. A couple of other questions. One is on the GEM revenues. These GEM revenues that we get on the per transaction basis, are they accounted in which segment? The payment segment or the e-commerce segment?
They are part of the e-commerce segment.
E-commerce segment. Okay. Thank you for that. And the last question is on the payment switch. Have we deployed the payment switch and what is the future outlook for that?
So payment switch standalone cannot work. We have launched a product called CPGS, that's the CC Avenue Payment Gateway Service for big banks and big corporate merchants. So that is already deployed and live, where we give the full payment gateway along with the back-end connectivity with various switches, including our switch or third-party switch or to the bank switches, whichever. So we have launched this around a year and a half back. We have successfully deployed in Oman, where the country's largest bank, there is Bank Muscat, which is already live and processing transactions of there. The number 2 bank in Oman, Bank Dhofar, also is live now. In India, we have signed up with JioMart. CC Avenue CPGS as a white label is already used by ICICI for their corporate side. The retail side is also under discussion. HDFC Bank Smart Hub is also live. The Kotak All-Pay Payment Gateway is also powered by CPGS, that's the CC Avenue Payment Gateway Service, the white label. So the whole CPGS is already started and live, to answer to your question.
Yeah, so that answers the question. And how do we make revenues on this? I mean, it's on a per transaction basis. What kind of BPS are there?
Yeah, there are multiple modes of revenues with different banks. It comes under different heads. So there is a setup fee. There is for per merchant onboarding. There is a fee. Then there is a per transaction flat fee that is charged for processing those transactions. There is support charges and many others. So it comes under different revenue, and it is from bank to bank how we close the deal.
It is a customer centric. It's also a customer centric.
There's no charges to the customer. There's no charges to the customer. It's the CPG.
No, I'm saying it is a customer centric. Our customer centric, bank centric pricing. It will vary from banks to banks.
Yeah, it depends from bank to bank.
Okay, thank you so much.
What scale the banks are. Yeah.
And this also goes into the e-commerce revenue?
No.
It will come under the payment business.
Okay. Yeah, it comes with the payment business.
Okay, thank you so much.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please restrict questions to 2 per participant. The next question is from the line of Unnati Bhavik with KR Choksey. Please go ahead.
Hello, good evening. You all have mentioned about the drivers of margins growth in your commentary. So you believe that as a share of value-added services like CPGS or banking services where you will be doing the lending, BNPL and AI-based credit platform. So you think that this is going to have an immediate impact on the gross profit margins in the few quarters ahead because you've been getting a good traction from the audience concerned with respect to these businesses. So do you believe that this is going to have an immediate impact on the GPMs, gross profit margin first thing, and what could be the share of this particular value-added revenue to the total revenue it could be as a percentage of total revenue or net revenue? And the second question is your depreciation expenses have been coming down year on year since Q3/21. So any particular reason for it and how do you think it will pan out going forward? Thank you.
Okay. I will take this question. Basically, the first question, to address the first question, is that, all our strategy which we mentioned actually, execution we mentioned this call, it is all actually going towards our achieving $100 billion total TPV. And that's basically a unique target for a mantra for the company. So we believe that all our business model, 75 to 80% of our business model is basically linked to the total TPV in terms of transaction revenue model. And even in this quarter, if you are seeing, total TPV has gone up 90% year on year and profits have gone up 89% year on year. So it is in a way directly a linear actually to total TPV in a way. And for all practical purpose, lending is basically definitely a next generation growth for the company, both for the top line and also for the bottom line. And external settlement, we have already experienced actually bottom line growth driver ever since September 2020. And we are also getting into the opportunities of offline opportunities. The point of sale terminals are going to really fade away in 3-4 years time frame from now. But for all practical purposes, that we don't want to miss that hybrid opportunity, and therefore that there are several functionality framework specifications are coming along with that the acquisition deal, which we believe that using our brand we will be able to really acquire more customers offline space. And plus you have the Trust Avenue lending in terms of a strong brand, which is actually launched today. And any merchants, not necessarily that they are our merchants, even external merchants can really log in, and we will be able to really do the lending services through partnership with our banks and NBFCs. So all put together, all lead to the growth driver, not only for the bottom line as the top line, but also for the bottom line. Therefore, we are all working actually for the consistent, improvements in the margins. You can see it actually this kind of an improvement in the margins even in the current year, and therefore that uniformly that on one side investments in platforms are happening, on the other side that growth in the business, all our legacy business and new business are really happening. Therefore that 2-3 quarters, you can see some amount of tractions in the bottom line, further tractions in the bottom line. But the objective is to really have a very scalable, sustainable, profitable growth in the medium to long term. That is what our objective. Okay. Second question, what was your second question?
Yeah, the depreciation expenses have been coming down year on year.
Depreciation, as you can see it in the last year, footnote to our accounts, our enterprise payment platforms or technology platforms or, the various assets, intellectual property assets, which got capitalized, and we have been amortized actually based on certain legacy conventional policies. But as the period actually goes, as the further investments are gone into this kind of an IP assets, the intrinsic value of the assets have been significantly gone up, and the remainder usage of those assets have also significantly gone up. And we are, as Hiren was mentioning, we are not a capital asset-centric company, and therefore that, for all practical purposes, with the existing asset that we will be able to really gear up our existing, that guidance of 100 billion total TPV in 3 to 5 years time frame. That's what we guided. Therefore, that the usage of assets have likely to usage of assets have been increased, and that is one of the reasons for our amortization reduction by 2.5 crores actually during the current quarter.
So how do you think it will pan out? Like, because you have already, you see that the valuation of those intangibles is actually more, then of course your amortization cost will continue to drop down, is it? Or how it will be? It will be stabilizing at these levels?
I think we believe that, it will be in the range of 35 to 38 crore on an average actually annual basis. And right now it is about 9 crore actually on average per quarter. And I think, 35 to 38 crores actually based on our existing assets, that could be the number.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Nandan Vartak from Wealth Managers. Please go ahead.
Yes, thanks for the opportunity. So I wanted to understand, does UPI or Google Pay like system require any services of Infibeam?
Hello?
Hello. Am I audible?
Are you saying that does Google Pay or?
UPI-based payment applications, do they require any services of Infibeam?
So basically, we use them as a payment option to offer it to all our merchants and we make money out of it. In the sense that in the UPI option across all our merchants, anybody wants to use or pay through Google Pay or Phone Pay or through Paytm can pay. So we use that as a payment option, and we enable their services through UPI. If they are a Google Pay customer, they can pay our merchants via CC Avenue on that.
Okay. And can you give an update on JioMart affiliation that we have? So what would be the revenue contribution on that part?
I will take this question. Revenue contributions is a customer-centric confidential information, so therefore we will not be able to share it. For that matter, any large enterprise customer-centric information, unless it is a public data, we will not be able to share. But however, our relationship with the large enterprises is too good, both on the strategic side and also on the tactical side. And our e-commerce marketplace platform is doing wonders, and with proposition, and the relationship is ongoing, both on the payment side and also on the platform side.
Okay. Thank you.
Thank you. Again, if you have a question, please press star and 1 on your telephone keypad. The next question is from the line of Arvind Datta, an investor. Please go ahead.
Yeah, hi. Can you hear me?
Yeah.
So my question is on the other expenses on the consolidated results. On a YOY basis, they've grown 92%, and on a Q-on-Q basis, 79%. So can you throw some color on these expenses, and how do you see the trajectory or the run rate going forward in the next 3-4 quarters on the other expenses?
Sure. So basically, the other expenses is basically provisions, the provisions that we make on a quarterly basis. So I think that is those are one-off charges. They are not recurring charges. That pretty much builds up most of the other expense, setup that you talk about.
Okay, so it's not going to be similar trajectory going forward. That's what you were trying to say?
Yeah, that's right.
Okay,
so what we do is we've been, in a lot of ways appropriately conservative and follow the standards. And in terms of following that standards, we provision every quarter.
Okay. My second question is regarding your slide number 26 on the investor presentation deck, which talks about secured lending performance, $175 million of express settlement. So, being a payment gateway or a fintech, can you lend, or how is this lending happening? Are you allowed to lend by RBI? And if not, then how is this happening?
So I will take this question. It's a practical. Basically, we cannot take any credit exposure, and therefore we are not taking any credit exposure. Both on the secured lending through express settlement and unsecured lending actually through relationship with banks and NBFCs. We are not taking any credit exposure. So that's number one. Number two is that the loan book of 175 million, which is equivalent to almost 700 million, and we're heading towards $1 billion, started from zero in September 2020. It is basically after the success of the transaction. So instead of making the settlements actually on T+5, T+7, T+3, they are making the settlement on the T day. So that reflects actually additional charge to the company, and our cost of funds is hardly anything, and therefore that is a profit driver for the company. And this activity is going to be a tremendous activity. The engine is working very well, and we are not taking any credit exposure. And this is allowed by regulator.
Okay, thank you so much. That's my question.
Thank you. The next question is from the line of Anil Nahata with an investor. Please go ahead.
Yeah, thank you. On the Trust Avenue which we have launched, how are we going to attract the customers? Since it's a marketplace, how are we going to attract the customers to that?
So there are multiple ways. The first thing is, like Srikanth had mentioned, that we will open up the platform for customers who are already using our CC Avenue payment gateway. We've got more than a few million merchants who transact payments through us. And that opens up an opportunity to offer them lending products. You see, there are multiple products in lending as well. Srikanth just mentioned one, which is express settlement, where we don't take credit exposure. Similarly, there'll be other opportunities as well. The big one, of course, are SME-based lending. The ticket size being anything to do with to move forward from 50,000 rupees to close to 5 lakh or 10 lakh rupees. And those are the ones that, typically banks don't cater to. And those are the ones that, who process through us that we can potentially open up that opportunity to. So that's one area. The second area is the larger enterprise clients who are using our platforms. So we open up that opportunity whereby we can reach out to many, many more audiences. And that becomes an opportunity to reach out to those clients as well. These are primarily the two areas that we will focus initially as far as Trust Avenue is concerned. There will be other products and features that get built on top of Trust Avenue as a roadmap, which we'll talk to as and when we launch. But initially, our appetite is to go with merchants who are using our platform and enterprise clients who would wish to avail the feature sets and the framework that we've developed to be able to reach out to those merchants.
So this is essentially a cross-sell opportunity using our other data. And do we also be able to use the GEM merchant base for this thing?
Like I said, we will have to work with each of our enterprise clients and reach out to as many of their merchants as possible. But to answer it in a short way, absolutely, we would like to showcase the Trust Avenue framework to many of our enterprise clients, and we'd like to see how we can actually participate. You see, anytime a merchant gets more capital and cash flow, they can deliver better on a marketplace. So to give you an example, there are two different kinds of factoring that happen. And RBI has opened up factoring in a very large way, where earlier only a handful of NBFCs were able to do factoring, now many, many customers. So what you talk about is maybe invoice level discounting and order level discounting. When a seller receives an order, you can discount that order, or when a seller invoices, you can discount an invoice. And so those are the ones that, are opportunities that we would also want to explore. Absolutely.
Great. And another question before this thing is the SDR has stabilized over the last quarter, over this quarter rather, from 6 to 6.2. How do you see it going for the next 3-4 quarters?
We are looking at a more upward trajectory because we were a little bit, because of the COVID pandemic, main performing merchants where the MDR is in percentage base, be it the hospitality sector, be it the airlines, be it all the others, were severely affected because of the pandemic. But now in the last quarter, they having come up, and we see a more aggressive quarter. They're coming back to their normal businesses, specifically with international flights also starting. So you should be aware that your company processes for many more than a dozen international airlines like Emirates, Gulf Air, Delta, Air France. So all those flights, when also it starts in a normal way, so we see a more upward trajectory on that intake on the gross margins. So from 6 to 6.2, we hope it will go up even more further.
Thank you so much and all the best.
Thank you.
Thank you. Again, if you have a question, please press star, then 1 on your telephone keypad. The next question is from Ajit Gharat with UBS. Please go ahead.
Yeah, very good afternoon, everyone. I just had to ask about the future outlook of the company. Just the board had already confirmed about what exactly. So what are the parameters we are using to get into the developed market like US or any of the other countries wherein we are looking out for the expansion of the business, or do we continue with the same kind of vision wherein we are targeting the overall business model which is there in the currently?
I will take this question. I think thank you for asking this question. This is a growth driver which we are talking about in the last 2 quarters. We talked about in the beginning of this year that we will double our express settlement in terms of growth driver, and we are actually about instead of 2x, we are about almost 4x. So that is one thing. Second thing is that we have said in Q2 that we will do an artificial intelligence platform for our credit services and lending services. And I think as we committed by December end, we have launched actually our Trust Avenue platform. Even though technically it launched today, but actually it got ready actually in December end, and we are waiting for the actual launch date actually. So this is going to be another driver for our lending business and credit business, which is going to be a huge opportunity. And we believe that this is going to be a next generation growth actually for the company. Number 3 is that on a pan-India, as you know that digital push is actually, we are just about 20-21% in terms of overall market opportunities, and still 70% to 75% is non-digital. So the conversion of non-digital and digital is happening, and that is helping us actually in terms of our legacy business doing a front-end PG payment infrastructure services business to our merchants. So this really led to the total TPV of 75,000 crores, almost $10.2 billion as we speak on a quarterly basis. The same number, about the same quarter of the previous year, the number was 39,000 crores. So it's been almost doubled actually, not only in the TPV but also in the bottom line basically. So for all practical purposes, with our push of digital, our legacy business will also continue in pan-India. And for all practical purposes that we are getting into the offline mode through our technology framework, partly in-house created and partly acquired actually through unique acquisition. And that is going to be an addressable market to really capture the accelerated growth, and this is the 4th growth driver. And 5th one, as you have mentioned, that India itself is a huge opportunity, and however, we started UAE about 3.5 years ago, again scratch zero, And today we are about almost 4 billion dirhams, almost close to $1.1 billion actually of processing which we are doing. With our women presence of credit card payments, and we are about 90% plus market share, and that is also likely to go up. Now, with the new joint venture being formed actually with the primary investments from Royal Family of Qatar, we at the management, we at the company sincerely thank our Royal Family of Qatar for their active interest in the company and to accelerate payment business in Qatar. So we believe that in the medium term, that is going to be a huge growth opportunity for the company. And of course, but for the COVID, we would have by this time started 2 more countries. But COVID has really slowed down our process of new country operations. But still, we believe that the COVID situations globally have not settled, even though in India it has settled partly, but globally it has not been settled. So once it gets settled, we will accelerate our growth opportunities in the new country operations, at least 2 or 3 countries actually going forward.
Thank you, Amy.
Thank you. Again, if you would like to ask a question, please press star then 1 on your telephone keypad. The next question is from the line of Emil, an investor. Please go ahead.
Thank you for the opportunity. My question is, and maybe it's more, I just want to hear your viewpoints, is let's say in the next 2-3 years, we achieve our target of $100 billion, or let's say more than doubling our current quarter's GMV rate. Where do you believe this, given the rate of competition, competitive intensity, the reality of the technology going on in the market, the amount of smartphones we have and not have, and where do you believe this take rate will go, the 6.2 bips which you believe will improve going forward? Of all the opportunities that we're doing in lending, how much can it improve our margins to? Like, do we have a ballpark viewpoint on that, or yet it's still being fleshed out?
Okay. Yeah.
Okay. So look, on the part, the GMV and the payment business is increasing, right? There's a misnomer that because of UPI being zero MDR, the MDR, nobody is earning in the payment business, right? But that's not the case, in the sense that even on the UPI MDR, government has given out 1,300 crores back as an MDR for those who did not earn anything for the past 1 year. And we expect that zero MDR somewhere down the line, either government will compensate or that. So there's money to be made on every option. And UPI is still a debit option. There is still credit which is growing phenomenally well. Like, if you've seen, credit has grown 100% in just 1 year. The credit card systems that are there, right? And then there are so many other. India has the maximum number of payment options in the world, more than 200 plus. Net banking is not affected. That is also growing. Wallets are coming in. And then subsets of those payment options, be it in EMI, sending instructions and others. So that business is growing. You can see from the GMV also, we are almost double what we did the last year in 9 months alone, more than double. So from that perspective, those payment business is growing. Where the real opportunity now starts coming in, kicking in, with backward integration as well as forward integration, how we put it. Backward integration is the platforms that we have built. We are earning in technology for and giving it to the banks and others, that for every transaction we process, we are making money. For every merchant ID we open, we make money. For every support we give, for every resource, we make money. So that's the backward integration that we have gone into with the CPGS product. And in the front end, many value-added services from the merchant. Lending is just one of them. Many other services that we will continue to roll out, which will be accretive. So payment processing is the growth engine, which is the what you can call it as a fast-growing commodity item. But the services behind and the services
ahead, the value-added services that we can give merchants, be it on lending, but many other of our platform services, there is money to be made. So the whole idea here is that payments being the core, you go do backward integration as well as forward integration and make good money. So that's whole strategy is all about.
I see. So you believe that the take rate will improve like dramatically, like it'll go from 6.2 to like 8, 9, 10. Like I know it's difficult, but do you believe that
it can grow? And as I said, those take rates went down not primarily because of UPI, but because during the COVID period, the main thing like entertainment, travel, everything went down, which are in percentage basis, and the utility items like bill payments, education, and others, which is typically in a flat fee, went up. That's why the take rate in flat fee is lower than in a percentage-based model where I'm charging a merchant say 2% and our cost is 1.64 or something like that. So percentage earning on a transaction cost is almost much higher than irrespective of the transaction amount you're charging 4 rupees a transaction or 3 rupees a transaction, and where you're earning 25 or 50 paisa per transaction. So those percentage-based businesses, be it travel, hospitality, entertainment, all these are coming back, and those take rates will increase. And overall, if you see the whole Indian market dynamics, it's only 27% which is digital. There's a whole new universe of 73% that we still have to go and capture. The entire healthcare is not done. We have a list of 1 million schools which are still not accepting fees online. There are so many other businesses, B2B that we have launched, is where the corporates, the vendor payouts, the vendor payments, so many things that we can do. So payments as a business is core to this, and as India moves towards the $5 trillion economy, these things will keep growing. And the margins also, because government has realized the zero MDR for UPI is not helping the payment system because acquiring is not growing. Hence, the government, the finance ministry paid out 1,300 crores for last year. Going forward also, it will continue to compensate. So the take rates and other things will grow, and the value-added services will take it to another level.
Thank you. So just one last question. This new that we had applied for to RBI, any updates from RBI on that? Like, are they coming out with any update on who's going to get a license anytime soon?
We have absolutely, look, I am also the chairman of the Payments Council of India, and in all fairness, I should say that we did put a question to RBI on what their thinking is, but they said that as and when anything happens, we'll let you know. Maybe internally they are collating or putting up the idea of how to, with so many players and consortiums applying. Maybe they might be doing the internal due diligence and a process. I think similar could be like how they did for a small finance bank when they made a committee and it gave out. I think those plannings will happen. RBI is not the one who will backtrack on not giving a license or anything. They've got through in pulling up this whole process, and so many consortiums have worked so hard in putting up such a big applications and other things. So RBI will definitely come out sooner or if not later.
Thank you, sir. Thank you for my questions. I appreciate it.
Thank you. This concludes our question and answer session. I would now like to hand over the call to the management for closing comments.
Thank you. Thank you all for joining our third quarter earnings call, and we will keep you updated on the new launches and new things that company will be undertaking as we go along. Thanks for your participation, and have a good evening.
Thank you very much. On behalf of KR Choksey Research and Infibeam Avenues Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.